What's up, everybody? Good morning. Welcome to Trading Live with Bubba. It is Tuesday, May the 27th, and there's a little bit of action, a potential buy right here in crude oil. If you want to go ahead and make that trade, you can. The stop would be at 59.85. 59.85 would be your stop. And my order's working above. Okay. Again, it's relatively quiet. Not a surprise, but I think one thing to take note of is this is the kind of moves we're looking for off of that kind of, see the heavy volume straight down. We expect to rally. That's what we're playing off of. You see it in all the indexes. Okay. You see it in gold here. That's the type of pattern that we're looking for. The notes. These are all potential trades to look at. Again, it is still kind of quiet, and I'm not saying you should have made those trades, but that's the action, that's the patterns that we're looking for when we watch and we trade these markets like that. And again, you can see that we've kind of steadied. So there's really no emotion. There's no panic right now. It's just the markets are just steady. And you can see by the way that we are just really just kind of consolidating now. So there's really no edge or advantage to jump in. I think this is, again, one of the things to learn. Right now, they could go either way, okay, which is always the case. But the probability is when you get a big down or a straight up, like this could have been, now there wasn't a buy-in, but this could have been a sell. It's not working out. It's not getting hurt, but it's not working out either. Again, these are the things that we've been missing. These are the ingredients that we've been missing in the market recently, is the lack of emotion, the lack of speed, the lack of attraction for the markets. And again, that's what makes, the markets challenging, which is why we wait for this, what we call the blow-off trade. That is when price and time become irrelevant, because the buyer, if it's going up, the buyers are chasing it up, and if they're going down, the sellers are panicking. And again, that's what we have to wait and watch for. And you can do that. You can use it on any time frame. It does work on all time frames. Here's an earlier example. This is not a trade we made or we would have, but this was an opportunity to sell. Okay, we marked it off last week, and of course you can see how far it's come down. These are things that you constantly look for in the markets, are the opportunities that can and will present themselves if you're willing to use the discipline and the discretion to make sure that you do take the stop when they come and don't play around with it. Okay. You have to be very disciplined and very firm on your decisions. We started talking a little bit last week about ratio trades. If you do trade futures, I think this is an excellent opportunity to sell either the MNQ or the MES and buy. You would sell 6 micros and you would buy 5 at the money calls. Okay. The trade itself is a slightly short biased, but as the rally continues, remember the delta stays steady on the underlying, which is 300. Okay. So we were selling the futures to be minus 300. We're buying the calls, which is plus 50. But of course, the plus 50s go to 60. Okay. And 70. So you do actually, the biggest profit is made when you're correct, but there is still profit to be made even if you're wrong. And of course, what we're looking to do is continue to roll as our markets are going against us on the future side, we're looking to roll our calls up and to capture some credit and some profit so that when the market does come down, and it will come down, again, it doesn't have to come down that much, is you want to continue to lock in profit. Okay. And, I've got it on myself in the MNQ, the MES, and I rolled up a number of times, and I have a short and gold from a couple of weeks ago. So I wouldn't do it here. But that's the kind of stuff that I'm looking for, because it's not affected on a minute-to-minute, day-by-day basis. I don't have to worry about the trade. It's not going to get too far away from me, against me. It can get way in my favor. Okay. And the other beautiful thing about using the MES futures is you can work those orders overnight to get out of the futures and lock in a net profit above, okay, above where your options cost is. So, for example, I put on this morning, let me give the exact prices so you know where I'm coming from. Hold on one second. This morning, I sold the MES, okay, at 59.80. Okay, I bought the May 30th 586 calls for 450. Okay, so right now, okay, I'm losing on the futures. Okay, I sold at 59.80, so I'm losing 25, let's say 26 points on the futures. So it would be $1,300 times 60%. So I'm losing $780 on the future side of the trade. And the option side of the trade, I'm making, okay, I bought the May 30th, which is Friday, okay, the 586 calls, and the 568 calls are up. I'm up $600 there. So yeah, I'm losing about $100 and some dollars, but as soon as I roll up my long calls, I'm locking in X amount of dollars that when the markets do come back down, I'm going to end up making a profit. And the key to this trade is having enough capital to hold on to this trade and to be able to stay in it, okay, as the markets move against you. But then also working your order overnight. So I know that my risk on the future, on the options, is $2,250, 450 times 5, okay? 450 times 5. So I'm working right now in order to cover my futures with a $4,000 profit, guaranteeing me, if that happens to hit at any time, guaranteeing me a minimum of $1,750. Okay. Now, again, those numbers can change, but based on raw math right now, that's what I'm working. Okay. And then I can hold the calls for free, or I can dump the calls later. You know, again, that's something I get, but I've already accounted for all the risk and all the cost. In the meantime, our crude trade is now slightly profitable. I would go ahead and put my stop in at break even on crude, just to make sure that it doesn't turn into a loser, because we aren't actually overly busy right now. So I'm not really excited about what's going on. But I would, again, I'm happy to stay in it as long as it keeps going up. I can't lose anything. I've put in a stop to cover my costs, cover my commissions, and make a few bucks. Okay. And I'm a scaled seller if they do continue to go higher. Okay. But that's what we use the ratio trades for. You could certainly do it with the, I just sold one of my extras. So now I've got 3 left. Okay. On my crude, and I've got a profit locked in. This trade, if you're trading micros, you're going to make a minimum of like $20. If you're doing the big ones, you're going to make a minimum like $200. It depends what size contract you're trading. Doesn't matter. Okay, it's a learning process, an experience to continue to work through it. So, anyways, when we look at the overall picture, we figured it'd be quiet today a little bit. You know, it should start to pick up. But again, if you're patient enough to wait for it. Now, that's why the other reason the ratio trades become so valuable, because you don't have to watch. I mean, the key ingredient is the future side, or if you can use the SPY itself, but obviously the SPY itself, the margin on the mini S&P or the micro MES is $1,100 a contract. So it's $6,600 margin. Okay. The margin on 300 shares of the S&P is, depending on what kind of break you get on margin, but let's say it's $100,000. Okay. So would you rather pay interest on 6,600, or would you rather pay interest on 100,000? Okay. Because that's the margin that you're taking. So it's just something to keep in mind, and it works just as well. Plus the fact that if I do get a big move overnight, okay, I can get out of my future site, because the futures are going to trade 23 hours a day versus the S&P is not, the spiders are not. So if something happens overnight, or, there's a crazy tweet overnight and you get a quick flush down, you have a chance to cover, okay, and get out. All right, I am now stopped out of my crude. The trade made, as I said, 20 to 200. It's over, okay. And now we're waiting for the next potential trade, if anything comes. And it really doesn't look like there's going to be much happening here. Okay. But on the ratio trade, so that does give you a lot of opportunity, okay, to be in, and you don't have to sit here and watch it. Okay. Again, the key to the ratio trade is having enough capital to A, carry the margin overnight, and B, to be able to carry the trade and let it go against you for a while. Okay. Because again, it can go against you. Now, again, you're not getting hurt. You are continuing to take profit off the table, okay, while waiting for the opportunity. Okay. And again, whether you believe the market's going up or you believe they're going down, I assure you there'll be a spike up at some point, and I assure you there'll be a spike down at some point. And that's basically what you're banking on, is a reversion to the mean. Okay. And certainly if I look here, the mean, okay, is back, around, where I sold it. So I could actually roll up my calls now, lock in some money there, look for a little bit of a pullback and get out. I'm not going to trade it like that. I'm going to wait for a much bigger hit. But that's the kind of thing you're looking for. So right now we have not a lot going on. Let's see if we can find any spreads to put on while we're waiting. A little bit longer term stuff. Of course, the ratios are long term. I mean, I've had gold on for a couple of months. So I don't have to worry about it. It continues to go. As we look at Apple, it did get a little bit oversold, but if you didn't do it on Friday, there's nothing to do here. Amazon, right at the mean, there's nothing to do here. Coin, getting close, but really nothing. Again, I don't expect this. Crowd is something. Okay. Crowd is something certainly I would look at, and let's take a look at what the option, what the spreads look like. And I'm going to do these for Friday the 30th. Okay, so let's see here. We're at 472. So if I look at the 475, 477.50, and I'm going to try to work that one for $1, 475, 477.50. Okay, that one's working. And Meta, nothing, right? Just stuck in consolidation. Google is close up there as well. Certainly, I would look at Google as one to potentially do. Google. I'm going to look at the 172.50, 175, also for $1. And if you're getting the pattern, I usually look for approximately 40%, 40 cents per dollar is what I'm looking for off of those trades. Okay. And IWM, nothing really. Microsoft, nothing really. MSTR, I'm sure there's nothing. It would be more of a buy than anything else. A put sale here. But we'll wait. Nugget, nothing really. NVIDIA, nothing really. The Qs, nothing. SMCI, nothing. XYZ, close. Now you can tell I'm not looking to get overly aggressive here either. Let's just go back and see, make sure we're not missing anything in here. We're still just churning around. The Russell's trying to break out, but again, there's no volume to go along with it. This is one of the things that obviously we're lacking. Okay. The opportunities to come along. Let's go back here for a minute. Tesla, getting close. Win, nowhere. XBI, nowhere. And Zoom, nowhere. So we got a couple of trades on, or one on, one working. There's not a lot to do. We'll continue to watch and see if anything churns in here and gives us some last minute opportunity. But I wouldn't be surprised if, again, it's pretty quiet. The VIX is down $1. That doesn't seem like it's down very much considering how much the markets are up. And I'm not saying, normally, just something to keep in mind, this is not that case. But if the VIX were up and the markets were up, you'd probably look to be a seller. If the VIX was down and the market was down, you'd probably look to be a buyer. The VIX is just an indication of, are they buying options? Are they selling options? So again, I don't see a ton here. Maybe something in gold will show up here. Our crude trade we're already out of. And again, there's just not a lot. And again, not a surprise, when you just come back from a holiday, that there's a very little lack of action. I think you'll start seeing, you've got the FOMC minutes tomorrow and things like that. So that would be something that might, again, we're waiting for the market action to re-pick up. That's one of the issues. We don't have enough action to get overly excited here about what to do. Even in gold, yeah, it's going straight down, but the selling isn't panic. The selling is just regular old selling. Okay. So I don't see a lot. And there's the buying and the Russell, there's no volume to it. So there's no chase, excuse me. There's no chasing to the buy. And what we're trying to trap those that are chasing the market up or panicking when they're selling. Okay. Because in those cases, they're almost always wrong. Okay. And we don't have either of those things happening in this market right now. And then when we looked at our spreads, we have some oversold conditions that we're overbought conditions that we're trying to take advantage of. Okay. But other than that, I'm not going to jump in and force trades because I don't think that it makes sense. I think that there's no trade is the same as a trade. And I think if you continue to try to force trades that are not ready, I think you put yourself in greater danger. Okay. Because you're really just trying to guess what the next move is going to be out of the market. That's if you're a short-term trader, right? And I think that that's always a mistake. I think you have to be patient enough to wait for the market. The Russell is making a new high. Again, if they can give us a burst in volume, if we can get one blow through there, maybe we can get a trade here. And again, we'll see. But other than that, the markets are pretty slow. Again, not a surprise. And we are going into summer, which, I don't know. They used to be busier, but we haven't had that much business all year. So I don't know that the summer is going to be any better or worse than normal. But I'm not interested in trying to force action. You have to learn to take little money, little profits, okay, while you're waiting, okay. And then when the home runs come, you're ready for them. Instead of when the home runs come, you're miserable because you lost a lot of money trying to chase around the market. It's not a good signal. It's not a good side to be on. So it's always better to wait for your opportunity. And yeah, maybe you'll miss a trade or two, but what's the difference? Who cares? Okay. Again, the markets are open every day and soon they're going to be open 24/7. So there'll always be an opportunity for you to trade if you give the markets time to trade and you wait for your opportunities. I think that's important to understand. Again, right now I have nothing to do. I mean, is the Russell, it's a potential sale, but it certainly doesn't even qualify. So I wouldn't want to be a seller. The one trade we had was right here. Okay. The crude, there's the volume bar. There's the sell-off. Now we didn't get the big rally, but there's the rally. Okay. So again, that's all we're looking for. Okay. Either side. We don't care which side of the market is on. We will take the opposite of either side. And I think that's important to understand as well. I think you got to continue just to wait and we'll see. Like I said, we'll see. Maybe the euro currency will give us something here. I doubt it, but you never know. Okay. But I also know that sometimes it's just better just to sit back and wait and be patient, because at the end of the day, your dollars are important and it's best to use them when the probability of the market is best in your favor. And right now, there ain't much going on, ain't much in our favor. So we had one winning trade in crude. We've got the crowd filled, and we have an open trade trying to sell the 172, 175, and 172.50, 175 in a call spread in Google. And I'll see you all on Thursday. Have a great day, everybody, and good luck, and just be patient. We'll see you later.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.